So how is the portfolio going? I mean, it's all depending. We're dumping and then we're pumping and then we're gonna dump more, and it's not only us. It's also the bond markets. It's also the stock markets. It's everything. Everything is mostly expecting the Fed to increase the rates or not to increase the interest rates, and it always has an impact in the economy. What the federal the Federal Open Market Committee is the exact committee that actually takes those decisions. And if they change the interest rate, it impacts both the economy and the stock market, because borrowing becomes more expensive or less expensive to individuals and businesses. And the funny thing with these rate changes is that the stock market feels them immediately. The general economy always lags on these changes, so you're not going to see any change in the real economy, on the unemployment rate, or how businesses actually are performing. This takes over a year to show, but when it comes to stock markets, it's immediate. And as a general rule, the higher the interest rate goes, the more negatively it affects earnings and stock prices. There is a small exception there on the financial sector, so financials usually don't follow that rule, but the bond market behaves similarly because new bonds are introduced in the bond market that are actually more profitable for the investors. So investors are going to dump those bonds and buy the new ones. It's messy, but I think I personally Whale's friend here, Chris, or the way you wanna call me, which again, it's not financial advice. I like reading this shit. I've done my masters on investment analysis and my finance guy, so they all come together. But again, it's a behavioral science, guys. It's not lab tested. It's 100% dependent on human behavior, and there are so many different little things that change that it's just doesn't make any sense to try to predict. It's that classic saying that, all models are wrong, some are useful. In order to create those models and make those predictions, you have to get to start with wild assumptions that don't really correspond to the real world because it's overly simplified. So yeah, we don't know what's gonna happen. It only makes sense as it goes through the human psyche and the behavior of the crowd. So in my opinion here we went a little bit of traditional finance explanations here, but this is the reason Bitcoin and the general market is behaving with such sudden moves. Like if you Google a little bit about the interest rate, you'll see there is an article that says who's the economist, Forbes, I'm not sure, that says we predict that the Fed is going to increase the rates 4 times this year, and everything crashes,